Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, first day of November, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office or away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel. It's easy to remember, youtube.com/CFRN. Not only do we stream live each and every day, but we also archive every daily show. Currently, there are over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. So with that, we'll open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. Lord, we give you all that we are, all that we hold. We ask for your guidance as we build and continue to shape this business. We trust that you will bless the work of our hands. We pray that you would cover this enterprise and cover our investments. We believe in your leadership, that you will guide us and advise us. May this venture be full of integrity, generosity, fruitfulness, and provision. We give you all that we are and all that we hold. In Jesus' name. Amen.
Amen.
Amen. Happy Monday, guys. Hope it's a happy Monday for you, whoever you are, wherever you are. A reminder that the time changes next weekend, or this coming weekend. Now, for those of you on the East Coast or the West Coast, you got to move your clocks forward, move your clocks back. Let's see, spring forward, fall back. There you go. Now, it makes a difference for me because in Arizona, we do not do daylight savings time for whatever reason. And so, for me, the opening bell on Wall Street is 6:30 a.m. Eastern. Beginning next Monday, the opening bell on Wall Street for me will be 7:30 a.m. Eastern. So, you'll see more of me in the live trading room in the mornings. So with that said, let me give you the numbers from around the world. Cash markets, indices, Starting here in the U.S., the Dow's up 59 points. NASDAQ is up 65. S&P 500 is up 3. The Russell 2000, something's up here. It's up 49 points. That's over 2%. Now, our man in the street, the Russell, which represents 2,000 small cap companies, often gives us a heads up. And so one would typically say, oh, okay, well, so the heads up is that all the markets are about to blast higher. Yeah, well, you see, the problem in that thinking is the Russell 2000 on a Monday morning, not a Tuesday morning, on a Monday morning has already exceeded the highest weekly trading zone. So, I could be completely off my game here. But I think the Russell is telling us that these markets are reaching at least a temporary high. Okay? The pullback, I do believe, is on the way. And we'll talk more about that as we get into the charts. In the commodity basket, crude oil up 77 cents, trading 84.34 last, gain of almost 1%. Gold up $10.30, trading 17.94.20 last. Silver up 11 cents, trading 24.06 last. In the Asian markets at the close, the Nikkei posted a gain of 754 points. That's over 2.5%. The Shanghai fell 3 points. The Hang Seng dropped 222, almost 1%. And in the European markets at the close, the FTSE posted a gain of 61 points. The DAX rose 117, and the CAC rose 69. For the CAC, that's a gain of 1%. The CAC's had a couple of real strong back-to-back days. So we have a mixed day in Asia, a green day in the UK, and so far it is a big green Radio Monday here in the US of A. So with that, we'll go to Michael and get a recap of what happened this morning in the live training room. After that, I'll come back. We'll look at the logic alerts, the concierge trade alerts. We'll take a walk through the charts. And at any time during the broadcast, if you have a question, put it in the question box. And then we'll put an answer in the answer box. Actually, we'll just answer you live on air. All right? Okay, Michael, right. I can see your charts. It's all yours.
All right. Here we go. Good afternoon, everyone. Today is Monday, the first day of November, 2021. Wow, first day of November. All right. If you have not taken a free trial with us, then all you need to do is go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. And you can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent to confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. So you got to make sure that you click on that confirmation link. All right. So spreadsheet. Today we started off the month kind of rough. It took a while to get the goal, and then I almost gave it all back. Did we ever get that number that I had said here at the end of the session? I believe I was looking. Hang on. Yeah, I was looking for it to get all the way up here, and it didn't. Did it? Yeah, I guess it did. Well, it got within a tick of it. It's within a tick of it right now. Okay. Well, anyway. Today, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the first day of November 2021. We lost 12 ticks in crude, made 22 ticks in gold, and we lost 5 ticks on the ES. Put us up a whopping 37.50 on the morning session. Today, it took 54 minutes and 11 trades to get to the goal for the day. And again, this is one of those days where when you get the goal for the day, you put the mouse away, because at that point, we're up 147.5, and we ended 110 less than that. And we took a total of 21 trades. So 10 more trades put us down $110. So a slow start to the month. We're up 37.5 on the first day. And so obviously we're averaging that on the month so far. We ended last month averaging $599.87 per contract per 2-hour day. This month we're starting off at $37.50, but that's okay. We'll get that out by the end of the month. We've now gone 207 out of 210 possible days of getting our goal so far in the year, and that puts us at $122,245 per contract per 2-hour trading day. Again, that's over 210 days, averaging $582.12 per contract per 2-hour trading day. If you were to quit when you got your goal for the day, and today would have been one of those days where you should have, you would have worked a total of 56.8 hours, and you would have averaged $2,522 per hour so far this year. Okay. All right. Let's get into the trades. Now, I'll do the ES first, and then crude oil, and then gold. Okay. The ES and crude, we were never positive on all day. So we'll start off with the ES. Now, in the pre-market, it had a pretty good run right here, but we didn't trade in the pre-market. Then once the markets opened up, you can see I was looking for it to bump down to wherever that mark was down here, to 4,600. It took it forever to get down there, but it stopped us out on this first one, and then it just got really choppy and sideways. Gave another short right here that I ended up missing that went down really nicely. Then right here, we picked up a couple of ticks on that to get us to put -6, right? So we're -8 here, and we got to -6 here. Then it was a slow grind down all through here. Okay, there was one trade right in here that I didn't take, and then it went right down to the zone, and I thought it was going to go down further. Now looking at the 30-minute, I was looking at this level right in here for it to get down to, but it never happened. And it was kind of ugly the way that it did happen. I want to say it was this bar right here. Went all the way down, and then it got all the way back up to the top, and it was just making a little doji up here at the top before it closed. But anyway, it did start moving back up. I thought it was going to go right through the weekly trading zone here and keep going, but it turned right around and came back up. This is an inverted head and shoulders. Right here's the head, here's the shoulder, and this actually went right up to the neckline. But we picked up another tick right there to put us at -5, and then it was just a mess. You can see it down here in the slingshot. It was just a mess going forward. We had one more break even here right before the end of the session, and then right at the very end, I had done the spreadsheet already, so I didn't take this trade. I didn't mark this trade down, but I was positive in this trade a little bit. And I was looking for it to get up to this level right here, and you can see it got up here to the tick, but it took forever to do it. And that's the way the ES was today. And crude oil, let's go look at crude. Today we ended up with -12 on crude. All right. Now in the pre-market, crude ran pretty well. Couple of opportunities there, but then when things opened up, well, we stopped out on this first one, or -8. Then we had a break even right here. We had a +1 right there to get us to -7. Then we missed a trade there, looks like, and looks like we probably missed one right here too. This probably would have been a break even had we taken it. This one we did get a little bit on. This one would have given us a little bit, but we were at -4 after this, and then we stopped out on this one, put us back to -12. And then it was just garbage. The rest of the morning, even during the break, there really wasn't anything you wanted to do here during the break. Okay. And gold. Gold was our friend today. And we did stop out in gold once or twice, I think. 2, 4, 15, 19, 29, 21, once, 28. Twice we stopped out today. Our first trade on gold was right in here. Now we missed this stuff right here at the very beginning. We could have gotten a little bit on that move, and then we could have actually gotten this whole move had I been on top of things. We could have gotten our goal for the day right there too. I think some people did actually get their goal for the day right there, but I didn't. We did pick up 2 ticks on this first move, and it went exactly to where I thought it was going to go, pulled back, We picked up 2 more ticks on the second move, and that went to where I thought it was going to go, and it pulled back. And then it didn't give us a trade setup because the cycle was resetting. Finally gave us a nice move right here, and we picked up 13 ticks on that. I think, no, 11 ticks on that. I thought it was 13, but it looks like we picked up 11. And that put us at plus 15. Then it pulled back, and I was looking for it to get up to here, but I was doing something else, and I missed that. And we ended up having the slingshot all messed up. There was a long opportunity right here. It went a few ticks, and then right over here, we picked up 4 more ticks to put us at plus 19. We had a break even there. Missed a trade there. That was a nice bounce off the BBC right there. See, that was the highest probability trade right there. The MA1 was the right color. We hit the BBC. The cycle was the right color. We had nice separation, but I missed it. Okay, so there was a nice trade there that we missed. Then I picked up 10 more ticks here to put us at plus 29. Stopped out there, put me back down to 21. I missed a trade there. Then I picked up 7 ticks here to put me at plus 28. I missed a trade there. Missed a trade there. Got a break even there and a plus 2 there to put me at plus 30. And I don't have it written in here, but I think this one right here was my final stop out on gold. Then I stopped out right there and put me to 22. Then it was all sideways right through here, and there was really nothing during the break. Okay, so it was not easy trading today, but that's okay. We got what we needed to get. All right, so let's go back here. Now, today, as I said, is the first day of November 2021. We lost 12 ticks in crude. We made 22 ticks in gold, and we lost 5 ticks on the ES. That put us at plus 37.50. Today it took 54 minutes and 11 trades to get to the goal for the day. At that point, we're up 147.5, and we took a total of 21 trades this morning. So on the month now, we're only up 37.5 over one day. And on the year, we've gotten our goal for the day on 207 out of 210 possible days. So that puts us at $122,245 on the year. So we're 210 trading days, averaging $582 per contract per 2-hour trading day. Now, if you quit trading when you got the goal for the day and you added 1 contract per month, you would have worked a total of 56.8 hours, and you would have been averaging $2,522 per hour at this point in the year. Okay? Okay. All right, guys. That is, well, here, I'll go back here. If you've not taken the free trial and you want to, go to eminitrainingschool.com. Here, all we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, and you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the link, we don't know that you took the free trial. So click that link. All right, that is really it. With that, guys, I'm going to pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Look at that.
Yes, sir. I'm ready.
Dwayne is ready.
Recap of the recap.
Today it took 54 minutes and 11 trades to get to 147.50.
Good job.
Thank you.
Did you hear my comments earlier on the Russell?
Yeah, I did, about the Russell being up 50 or something like that. And
Well,
everything
it's
was
exceeded
up.
the highest weekly trading zone by
Yep,
Monday
exactly.
morning.
Yep, highest weekly trading zone on a Monday. So what we'd look for now, typically, everyone, is puts, buying put trades, put options right now. That's what we would look for. So what Dwayne was saying earlier is, when you see the Russell, you think, hey, maybe that's leading the pack. And when in reality, hey, maybe that's the last one to join the pack. That's over the years, that's been the more likely case right now. Given all the parameters, the timing of everything right now, that would be the most likely scenario. But is that time of year?
Anticipate a reversal to the downside.
That's what we would typically do right here, right now.
So whether it happens today, happens tomorrow, happens Wednesday, I think the Russell man in the street has shown its hand early in the week, and so if the markets continue to move higher, we'll continue to trade what's in front of us, be long. If the markets turn and go into a major retracement, then we'll trade what's in front of us to the downside. That's one of the great things about trading futures, is you can be long, short, and long again all in the same hour if that's what the chart in front of you tells you the market is doing. We don't try to guess what the market is doing. We actually look at the chart and see what the market is doing. And our trades are based upon the next logical move based on whatever's in front of you, based on our underlying strategy that Michael teaches you every morning. Valerie and Michael for 2 hours, 9:30 a.m. to 11:30 a.m. Eastern. Whatever's happening in the markets, the strategy and the indicators tell you exactly what type of trade you should be looking for. And Michael teaches you how to time your entry based off the 4-tick range chart. It's not a 4-tick chart because that would be too fast. It's a 4-tick range chart where every candle is exactly 4 ticks tall. Price flows across all markets and all time frames exactly the same. Whether it's a daily chart of the S&P or a 1-minute chart of crude oil, price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending journey. That's how markets work. Once you learn to embrace that, the time frame that you choose to trade off of becomes immaterial. Last week in the last Thursday in the workshop, I brought up some odd number like 971 ticks. It's not a fib number, has no meaning of any kind in the universe that I know of other than being the number that comes after 970. But yet I brought up the tick chart, and what do we see? Price continuing to revert to the mean and bounce off the mean, which in our case is the BBC. It stands for bull bear cross. When price crosses above it, we're bullish, looking for higher prices. When price crosses below it, we're bearish, looking for lower prices. The pullback holds more often than it doesn't. Everything I just said in the last 60 seconds is everything that you need to trade the markets. Now, to just hand you that information and say, go get lucky, that would be wrong. That's why we spend 2 hours every morning walking you through the mechanical strategy, trade after trade after trade. Michael puts on and takes off trades in front of you live in real time, explaining what he's doing as he's doing it, and answering every question that you have about what he's doing and why he's doing it. And if you ask him a question today or 6 months from today, if it's the same question, you're going to get the same answer. Because our methodology and strategy embraces the underlying principle upon which markets operate. And that, like gravity, doesn't change. You can't see gravity, but you understand the power of gravity. You can't see the wind, but you can see the effects of the wind. Yes, if you're Jeff Bezos, you can go to outer space, and you can escape the gravitational pull of the Earth. But let's face it, these markets aren't on the moon, they're on Wall Street. So, hope that makes sense to you. Logic 247, our around-the-clock, 24/7 Emini alert service. Opens for business Sunday night, 6 p.m. Eastern. Remains open till Friday afternoon at 5 p.m. Eastern. So far since Sunday night, last night when the markets opened, we issued a total of 16 alerts. 2 never triggered, Still waiting on the outcome of 12. Had 12 actionable alerts, of which 3 or 25% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and the simple 3-step process that we teach all of our traders. Last week, which was week 169, this is how the week ended. Last week, week 169, had a total of 60 alerts. 9 never triggered. We had 51 actionable alerts, of which 12% or 6 trades would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and the simple 3-step method we teach all of our traders. Along with the logic alerts, which come out around the clock, we also have our original alert service, the concierge trade alerts, where the format is a bit different. Instead of streaming 24/7, the CTAs are published as a static report shortly after the Globex open each evening. We're in the Monday session right now. Today at 5 p.m. Eastern, not 4 p.m. when stocks close, but at 5 p.m. Eastern, the Monday session will end. After a 1-hour break, 6 p.m. Eastern tonight, that begins the Tuesday session. Once these numbers are issued, they're good for the entire session. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. If you want to grab a screenshot, go ahead. There's 2 lines for each market: S&P, Dow, Russell, crude, NQ, gold, and silver. When we go to the charts, you'll see I've drawn a line at 46.20 and a line at 45.86. Once this static report is published for the current session, which again last night was 45 minutes after the open, if price starts trending up towards 46.20, that's bullish, and so you'll use everything you learn in the live training room and Logic 247 to find opportunities to be long the market. If price, on the other hand, starts trending down towards 45.86, that's bearish, and everything you learn in the live training room, along with the help of Logic 247, will help you find opportunities to be short the market. Okay? So, I'm sure you have your screenshot by now. There was a couple of headlines that I thought were worth mentioning, just a couple. Most of you don't know what Roblox is. If you have a teenager in your home, or if your 40-year-old son is still living in your basement, then you may know what Roblox is. It's the backbone of the biggest gaming community out there. Here's the headline: Roblox comes back online after 3-day outage. Now, I know a lot of folks been throwing rocks at StoneX here lately because of some connection issues, and hopefully those of you who understand this see what I just did, throwing rocks at StoneX. I'll ring my own damn bell. Alright, Roblox came back online late Sunday after 3 days of disruptions for millions of players who use its game and related website. The popular game creating platform started having problems Thursday night. Roblox said then it was working hard to get things back to normal, but the problems persisted. The company tweeted Sunday that it had pinpointed the root cause and had a solution. Service was restored hours later. The company told The Verge the problem was due to an internal issue and not an external intrusion by hackers. Roblox also said the outage had nothing to do with a Chipotle promotion involving $1 million worth of free burritos, which some users had noted went live just before the Halloween weekend glitch. So there's a number of services that have had connectivity issues over the last few weeks. I'm going to post a video later. I've got to figure out how to post it in a way that it won't get taken down, because I know when I post it, it will get taken down. We've asked ourselves, you've asked yourself, why is the government so desperate to get this vaccination into my body? Once we watch this video, there's a little thing right now, very controversial. It's called 5G. If you have a newer phone, it's running 5G. When I got my replacement phone in the mail the other day, I had to remove my 4G SIM card and insert my 5G SIM card. This video does a pretty good job of explaining how nanoparticles, once induced into the body, can communicate with the cloud via 5G. Now, which cloud? Happens to be a server run by Amazon Web Services for the CIA. Now, I know that sounds like one huge conspiracy theory, and that's okay. Take it for what it's worth. Life as we know it, folks, is changing. You have to understand that. What can we do? I don't know. I'm being honest. So far, I have chosen personally not to take the vaccination. I'm not trying to scare or shame anyone who has chosen to or been forced to take the vaccination. I joked early this spring that the day would come when they would show up at your door with a syringe in one hand and a 45 in the other. And you're going to get one shot or the other. I said that just off the cuff, just you know, jokingly. How far away are we from that? I don't know. American Airlines cancels hundreds of flights. Lots of smart people have chosen to just say no. Moderna claims the FDA needs more time to access vaccine for teens. The Supreme Court is going to hear arguments on the Texas abortion ban. And everyone's favorite White House spokesperson, Jen Psaki, White House press secretary, Jen Psaki, who we pray right now, Lord, for her good health. We pray that by the power of the Holy Spirit, whether she believes in you or not, I don't know. But God, I pray that by the power of the Holy Spirit that you would touch her body and that you would heal her. White House Press Secretary Jen Psaki announced Sunday that she tested positive for the coronavirus and would work from home during a 10-day quarantine. Psaki said she was experiencing COVID-19 symptoms, but they were mild thanks to the vaccine. We'll circle back on that. Psaki said she hadn't been in contact with President Biden or his top aide since Wednesday. She decided not to accompany him on his overseas trip to the Group of 20 and United Nations Climate Summit as a precaution, because members of her household had tested positive. Psaki tested negative through Saturday before getting her positive test on Sunday. She added that she hoped to test negative and return to work after her quarantine. Earlier this month, Homeland Security Secretary Alejandro Mayorkas became the first member of Biden's cabinet to test positive. Again, we send best wishes to Jen Psaki, and we pray that God would heal her and make her 100% whole. Prime Minister Boris Johnson says it's 1 minute to midnight in the climate crisis. I can't even bring myself to read the rest of it. And a couple other headlines that you might find of interest. By the way, I guess you know Facebook changed its name. Maybe you did, maybe you didn't. It's been a few days since Mark Zuckerberg announced Facebook's new name. But while Wall Street internet analysts are cheering this change as a bold move, not everyone's on board. The guy who coined the term metaverse is distancing himself from Facebook's meta plans. Neil Stephenson, author of the sci-fi novel Snow Crash, has previously said he was just making stuff up when he first wrote about the metaverse, and that he has no business relationship with Meta, which is the new name for Facebook. Unfortunately, Facebook won't be able to use the @Meta handle on Instagram because a motorbike magazine from Denver already uses it. Instead, it had to settle for @WeAreMeta. It has a chilling sound to it. Tech executives are expressing concern. Google's former CEO spoke out about the metaverse, saying it's not necessarily the best thing for human society. That's the former Google CEO saying it's not necessarily the best thing for human society. Microsoft has surpassed Apple as the world's most valuable company. The tech giant dethroned Apple after supply chain issues cost the company $6 billion. MailChimp employees are devastated by the bonuses they got after the company's sale to Intuit, which we talked about last week. Employees who held no equity in the company were promised big paychecks after the sale, but many are disappointed by the amount, and some even plan to quit. Employees are describing their big paycheck as crumbs. Netflix staffers have filed a labor complaint over the Dave Chappelle controversy. The employees are accusing the streaming giant of retaliating against them for speaking out about its handling of the comedian's new special. If you've not heard it, maybe you're not even a Dave Chappelle fan. I don't know if you can find it anywhere on the internet at this point. That guy makes some great points. I've mentioned a company to you before, GoPuff. It's a business that makes a run to the convenience store for you. Maybe you're watching the game, you need another 12-pack of beer, or a bag of Cheetos, or a pack of Marlboros. Doesn't matter if it's sold in a convenience store. GoPuff will go get it for you and bring it right to your doorstep. Workers at GoPuff, currently valued at $15 billion, are going on strike, effectively shutting down the Philadelphia store as they attempt to reroute orders to other locations. There's a lot of tension escalating between drivers and GoPuff managers. Tesla's recalling nearly 2,800 vehicles. There's a potential suspension problem that could increase the risk of crashes and has resulted in a recall of thousands of Model Y and Model 3 cars. And some leaked documents explain why TikTok is more appealing than Instagram's Reels. An internal study found that users prefer TikTok over Reels, Instagram's short video feature. Participants in the study said Instagram's video feature is stale, boring, and repetitive, and that TikTok is more fun. TikTok is also one of the largest drug distribution networks on the planet. You only need to know the proper hashtag to enter. And anything that you used to be able to buy on the dark net, on the dark web, some of you may remember the Silk Road story. We broke it as it was breaking. We took you on a tour of the dark net one day on this radio program many years ago. I'll never do that again because I don't want to encourage people to go there. But what was once on the dark web is now in broad daylight. If you have kids, you need to sit down and have a serious talk with them. If they're living under your roof and they're not 18, even if they're 18 and they're not paying rent, you should have access to their phone. You should be able to know what they're looking at, who they're talking to, what they're saying, or where they're going. If that sounds draconian, I refer you to the Bible. It teaches you how to raise your children. And is there anything else? Why does Amazon's delivery truck sound like a demonic crow when it's backing up? It's a mystery people on the internet are trying to solve. Some experts say it may have a pretty valid explanation. But I'll leave it at that. And that's it for the headlines, or any that I feel were worth sharing with you. A lot of stuff out there on that internet. Why won't it shift? There we go. Okay. So let us do as we do. Go to the daily chart of the S&P 500 E-mini futures. I've already refreshed the chart, so I don't have to do that. We have a new all-time historic intraday high today. We had an all-time historic intraday and closing high back on Friday. The new all-time historic intraday high, 46.19 and a half. Okay? It's possible that might stand for a while. Okay? You know, I made that statement on this day with no way of knowing this was to come. But I'm making the same statement I made on that day, on this day, November 1st. Now, it's not a forecast. It's just simply an observation. The 24% Fibonacci price retracement of the last leg up is at 45.34. The 38% Fib retracement, 44.82. The daily BBC, you need to always know where that is, 44.99. And we got the 50% Fib retracement, and then we've got the 62% Fib, but right above the 62 Fib, we've got the bullish cross. This bearish cross led to this move to the downside, and when price returned to the area of the bearish cross, it found resistance. This repeats itself over and over again and again. Okay? So we get another leg to the downside. We pull back to the BBC. The pullback holds more often than it doesn't. But we got a higher low because price ran into blue and climbing. And the larger the time frame, the more true this is. When price runs into blue and climbing, when it drops to blue and climbing, you expect support. When price rallies up to red and falling, look for resistance. Okay? Now, when we opened last night, we had the BBC directly above price. Okay? So we opened, we ran higher, we ran lower. Currently, we basically have a doji on the day. Important numbers. Numbers to write down. 46.19 and a half. You should expect that to be good resistance until proven otherwise. The low of the session, 45.86.50. Again, that should be good support until proven otherwise. And then the step line at 45.79. So you got support here, support here. After that support, the next potential support is at 45.50, and then the 24% Fib retracement, which is at 45.34. Those are important numbers to keep in mind from the daily perspective. Now, as is typical on Mondays, my charts are still showing last week's weekly trading zones. By tomorrow, I will have updated the zones on my chart to reflect this week's weekly trading zones. The weekly trading zones are issued Monday morning at 6:15 a.m. Eastern to all of our members. Published the zones since December 14th, 2009. Okay? Now, we opened last night. In fact, I posted a couple of shots. Let me drag them up and show you what I'm talking about. Okay. Just keep going. Okay, here was the gap higher open last night. The pullback to the BBC, the pullback holds more often than it doesn't. And it gave us a very nice leg to the upside to the new all-time historic high. Okay. Price gapped at the open, gap filled, pulled back to the BBC held from the yellow arrow entry. Michael teaches this every day. Price pulls back to the BBC, up close, go long. Okay. From 46.07 to the swing high, there was 8 points in there. If you were just looking for 2 points, could have gotten out of red and falling. Works both ways. Okay, there's the rally up. We come down through the BBC. We pull back to the BBC. And here comes the drop. Okay? All right. Prior to that, I posted this originally on Friday, but I reposted last night. I mentioned in a previous post that at the close Friday, price was attempting to reach the highest weekly trading zone. And to keep that in mind Sunday night when we reopen. We reopened exactly at last week's highest weekly trading zone. My ability to predict that is beyond my ability. Here's where I posted it on Friday. This was the rally into the close. On Friday, this bullish cross took place at 15.44. Price pulled back to the BBC. Here's where we ended the session, trying to get to the highest weekly trading zone. Based on the strength of the green candle that closed above the BBC, entry 45.88, stop loss 45.86, 2 points, and that's what happened. If you choose the close of the first red candle below blue and climbing to exit the trade, it still made for a nice trade. Price did bounce at the BBC, and once price closed above red and falling, a re-entry long would have also been acceptable. In other words, right here. Okay. And I think that's all the charts that I have posted that I want to talk about right now. Yeah. So that was this morning. Hopefully you caught that pullback. All right. So we're on the 30-minute chart. of the S&P. Again, these are last week's weekly trading zones. You should put the new zones on your chart first thing Monday morning when they're published. But don't throw out the old zones, okay? Because the old zones, the previous week zones, hold sway over the market. Sunday night, Monday, sometimes into Tuesday. Sometimes a previous weekly zone remains important for an entire week. We've even seen it happen 2 weeks, 3 weeks. But something happened last night that we have never seen in the history of the weekly trading zones. We had more zones this week that were identical to last week's zones. The greatest percentage in the history, going all the way back to December 14th of 2009. Okay? Now, what does that mean? Hopefully over the week, we'll together, I'll help you discover and understand the importance of it. This show's only so long, so I'm going to hold off for now. All right. The long CTA was up at 46.20, never got triggered. Short CTA was 45.86. It hasn't triggered either. Price spent a lot of the evening consolidating right around the weekly trading zone. Price has now pulled up to the BBC, which we expect to be good resistance until proven otherwise. And from there, look for a leg to the downside. If price can overcome the BBC, overcome last week's zone, then we'll trade long 46.10 up to 46.18. It's that simple. You trade what's in front of you. No matter what you think should happen or what the guy on CNBC said about the market, he doesn't know any more than you do. He just got a suit, tie, and a paycheck with a comma. Or a couple commas. Most of you know more about how markets work than the guys that you're watching on TV. May not feel like it, but sometimes. But it's a true story. Okay? Price pull back to the BBC, the pullback holds more often than it doesn't. There it was. One other thing worth mentioning. Last few weeks, we got accustomed to having gap fill trades. Okay? Trades that fill the gap. Well, last night we had some gaps. This was the gap open. This is the gap getting closed. Right here. And that was an official alert in the channel. Okay? The highest probability trade I know of is the gap fill trade in futures. Stocks gap all the time. Rarely do we see gaps in futures, except on Sunday night when the market's been closed for a day and a half. And during earnings season, we might see a slight gap, higher or lower, depending upon who's reporting that day and whether it's a big hit or a big miss. Okay, all right. So, on the ES, we have to wait and see. Now, I did put out a trade this morning somewhere. I mean, a notice. Let's see if I can find it. Well, I obviously didn't put it there. So where else would I have put it? Oh, right here. I said, watch the 30-minute BBC overhead for resistance. So, this chart, we had a pullback, it held, we had a leg, we had a retracement. Obviously, it held because price is now at 46.04. Watch the 30-minute BBC overhead for resistance. Okay? Now, I gave you that this morning at 8:30 a.m. my time, 11:30 a.m. Eastern. Okay? Leg, retrace, leg, retrace, leg. And we are now at 46.04. The BBC, which we expect to be resistance until proven otherwise. So to those of you who are following along on the 1597, congratulations for paying attention. Oh boy. The open mic syndrome again. Did I break it? Can you still hear me? Can anybody hear me? Put something in the chat box if you can hear me. Thank you very much, Del. You should reflect in life. This is just a general statement. You should reflect in life. Who are the people in your life that you can count on? I have a lot of people I can count on in my life, in my personal life, and in this trading life. But it's important to know who those people are, because they deserve your respect, your admiration, and as they are there for you, you want to be there for them. So we won't hang out. This thing may spike up, touch the zone, then get resistance. We're not going to start shorting just because we're at the 30-minute BBC, but we know this is the spot where the market is most likely to find resistance. You see just above is that bearish cross. That's another potential resistance. Last week's zone is another potential resistance. And then we've got a this week zone just above. Okay. So, is this the high of the session? Is this the new all-time intraday high for a while? So, those are my thoughts. Again, not a prediction. It's an observation. On the Dow. Obviously no trigger on the short side, triggered on the long side. In early going from 840, we ran up 8 points, that's $40 a point. And then price pulled back to the BBC where the pullback held. And we climbed the back of blue and climbing to put in a swing high. Well, I guess the swing high would be 888. So that's 48 points, $5 a point. It's over $200 per contract traded. And then price pulled back to the weekly trading zone. We pulled back to the BBC and we bounced. We triggered again. Okay? So we had one trigger, we had two trigger, we have three triggers. But not all triggers are created equal. On a long, you want the support of blue and climbing. Going long into red and falling is most often financial suicide. Okay? Because look what happened. I brought this up last week. What if you just were long when it was blue and short when it was red? And long when it was blue and short when it was red. which brings a million questions. But what time frame? Should I use a time chart or a tick chart? Or is this a range thing? Go back and watch the beginning of the show. Okay? Because I already explained that. The Dow is pulled back to the BVC where we just got a new candle. And so far, it's red. So while this did spike up and give us the high of the session, based on the guidelines, when you trigger a CTA, you got red and falling overhead. I mean, you can roll the dice if you want, but the guidelines say pass. Okay? It's a business based on probabilities. You want the probabilities stacked in your favor, not against you. If you want the probabilities stacked against you, go to Vegas, because every casino in Vegas has stacked the odds against you. That's how they build those big fancy buildings. All right. And this, my friends, just might be the canary in the coal mine. If you don't know what that means, don't worry about it. Price consolidated last night along the weekly trading zone for quite a period of time. Did drop down to the BVC. You'll notice, of course, the pullback held. It does hold more often than it doesn't. The CTA long was 2308, not 2308.20. I got to reload this platform and get the right thing going. So 2308 up to 2311.40. So almost 3.5 points. We'll call it 3 points at $50 a point, $150 per contract trading. And then price pulled back to the BVC in the weekly trading zone where we expect it to hold, simply because it holds more often than it doesn't. But dilemma, right? We've got red and falling overhead. What's a trader to do? Well, as this candle starts building, as it overcomes red and sideways, and as it takes out the previous swing high, pretty as a picture, price ran right up to last week's weekly trading zone. Now, I'm not doing a woulda, coulda, shoulda kind of thing. I'm just trying to help you understand what you need to look for, what your observation should be. We know resistance is here, so if that resistance gets broken, it's going to go look for the next level of resistance, which in this case, because this was issued on Sunday night, it would be last week's weekly trading zone at 2323/2324. So price found resistance, and when price finds resistance, what does it do? It goes and looks for support. Where did it find support? At the BVC to the tick. Price always reverts to the mean in every market, in every time frame. You know, I'm sure a lot of you were busy last night, but as the session opened, I had a couple people with some questions that needed some help, people who really mean a lot to me. And I reached out to the audience and asked if some of you guys could help them and answer those questions. I'm not scolding you. I'm just sorry you weren't there. Because we're a team, we're a family. We help one another. It's not a competition. So I know that many of you have very generous and giving hearts, and you would do anything to help a fellow trader. I'm just sorry. I'm not mad at you. I'm just sorry that you weren't there last night in front of your screen so that you could give the help. Just with some simple questions. But on Sunday nights, it's a very hectic night for me. You know, I was up to my eyeballs and stuff, and I wasn't able to give them the time and answer they deserved, because I was trying to give you trades and your weekly zones, your CTAs, and such. So, again, I know that many of you go out of your way to try to help a fellow trader. And so, instead of scolding you for not being there last night to help, I want to express my gratitude for your help during the times that you are there. Alright, so 2308 again took us up to 2311. 60 is 3.5 points. Price got back below the trigger, triggered again, but old red and falling. So you got to overcome red and falling before you go long. And once you take out these swing highs, Russell just literally became a rocket ship. It's just 2,000 small cap companies. S&P 500 is 500 large cap companies. The fact that the Russell has broken this week's highest weekly trading zone by Monday morning, to me, that speaks of a potential reversal across all the indices of significant magnitude. I could be wrong. I don't know what's going to happen next, but I do know what the next high probability thing is. And that's what you should know. You should know what the next high probability thing is every time you look at a chart. What's price trying to do now? It's trying to find some support. It found resistance. So now it needs to find support. Where's the most likely place to find support? Start with the step line. Then balloon climbing. Then the BBC. In that order, because that's how the chart's laid out right now. Well, if you think price is going down to the BBC, why don't you just short it down to that? Because that would be a counter trend trade. There's over 8,000 alerts in the alert channel over the last 170 weeks. Every one of them is a trend trade as defined by a 30-minute chart in the BBC. If price is above the BBC on a 30-minute chart, you will only see long alerts. If price is below the BBC on a 30-minute chart, you will only see short alerts. Okay? All right. Moving on. NQ. Now, certainly identified important price, important area. Just didn't do much with it. 15908. 5 points, $20 a point, $100 per contract traded. 6 points, $20 a point, $120 per contract traded. Obviously the short CTA never triggered. I haven't said it today, but the vertical line on all the charts separates today from yesterday. This is Sunday night, Monday. This is Friday. This is Thursday. Okay. Now, what have we seen happen in the S&P, the Dow, and now the NQ? Price has pulled up to the BBC, which we expect to be good resistance until proven otherwise. Okay. The only one bucking the trend are man in the street. We opened here, price pulled back to the BBC, the pullback held. It ran us up to the line in the sand where price got rejected. It tried it again and it got rejected. Did it create a tradable? I mean, was there a tiny bit of profit there? Yeah, there was. Okay, not anything you're probably going to write home about, but it is what it is. Price behaves around a CTA, often like it does around a WTZ. In fact, you can think of CTA as a daily trading zone, a DTZ. Okay. You're watching it on your 30-minute. You know when you're approaching. You go to your smaller time frame. And even here, once we pierced it, this pullback to blue and climbing at 15,891 would have given you a $200 per contract trade. Multiple time frames are very important. The larger time frames show you what the market is trying to do. The smaller time frame helps you find the setup to participate in that bigger picture move. So from here, we've been consolidating now. We're on the fourth 30-minute candle. In fact, we have consolidated so long that red and falling is starting to curl. And when red and falling curls, it can become blue and climbing. Now, if price were to just suddenly make a drop, then that would prevent red and falling from becoming blue and climbing. Okay? So, patience is what's required here. Beautiful window of opportunity. 823. I'll even tighten it up. 1821 to 1810. That's $200 per contract traded. Okay. But gotta wait and see if price is going to get there. If buyers are more committed than sellers, then we'll see price rise. If sellers are more committed than buyers, we'll start printing red candles. Trading's not easy, but it can be simple if you allow it to be. Okay? Don't try to know everything there is to know about markets. Don't try to know everything there is to know about trading. Learn enough to consistently reach your goal on a daily basis and just keep doing it. All the other stuff is noise. All the other stuff is designed to generate income from people who want to trade for a living. That's why you pay us once, you never pay us again. If you buy a passport, it's lifetime. It never expires. Gives you access to everything we do, everything we've ever done, and anything we may do in the future. To get a lifetime passport and access to all of what I just mentioned, including owning the indicators for life, the logic alerts, the CTA alerts, and a living, breathing teacher who teaches you how to trade every morning for 2 hours from 9:30 a.m. to 11:30 a.m. In fact, you have two. You got Michael and you got Valerie. Okay? 9 out of 10 traders fail because they don't have a teacher. You can have 2 teachers. To get your passport, go to eminifuturestrading.com. If you have questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Okay, so the NQ just continuing to consolidate. Prices at the bearish cross. If it trades a little bit higher, gets above the BBC, a little window of opportunity up here. We don't care which way price goes, as long as it goes somewhere, and as long as the move is logical. It's logical. If price gets this high, it's logical that it's going to try to get to the previous resistance. Doesn't have to be any more complicated than that. CTA on crude last night, 83.85. So the first trigger took us to 84.20. It's $350 per contract traded. Price then got back below the trigger and ran to the target. On a long alert, the final trade to target is always the weekly zone above. On a short alert, the final trade to target is always the weekly zone below. Does it always get to the final target? No. Sometimes it only gets to the first target. Sometimes the second target. Sometimes the third target. In this case, it went all the way to the target. So from 83.85 to 84.75, that is a $900 per contract move. Had you entered at the published entry and exited at the published target, for the one contract trader, that's a $900 move. And price stayed above the step line and blue and climbing all the way up. Price starts to walk sideways. You know the story. Okay. So, last night early going, we had resistance at the zone. And Sunday nights, we're using the previous week's zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern for over a decade. Okay. Once we get above this zone, we have a leg, we have a retracement, and then we have a leg. Zone to zone. About a $1,400 per contract move from zone to zone. Okay? But you had logic alerts in there, and of course you had the CTA that we're going over right now. Alright. Gold. $17.94 was the trigger. We hit $97.50. That's $350 per contract traded. Price got back below the trigger. Still got blue and climbing. Swing high right now is 1794.8. So 80 bucks so far in the current candle. On the other side, this number is as published 1781, not 1781.3. And the swing low is 1780.2. So that's $80 per contract traded. That's what the market made available. Okay. Silver. Long trigger was 24.03. Made it up to 24.06. That's 3 pennies, 2 pennies, 100 bucks. Back below the trigger, 24.07. 4 pennies. Back below the trigger, back up to the target. Back below the trigger, and trying to get to the target. On the short side, the number was 23.85. Two-sided action. This first drop was 23.84. It's a penny. And this drop was 23.81. It's 4 pennies. And this drop 23.82, 3 pennies. Okay. The price of silver moves $1 if you're trading if you're holding physical silver, and the price moves $1. Well, then you make or lose $1. If you're holding a silver futures contract and price changes from $23 to $24, that's worth $5,000 per contract traded. Now, you'll notice here how we triggered. And, I mean, this candle closed right on its high. Why did price not just keep going up? It ran into the step line. when price runs into the step line, you have to expect it to be resistance on the 30-minute chart until proven otherwise. Okay? Doesn't mean price can't overcome it. It's trying to. Okay? So when you place your trade, if you place the trade here at 2403, wherever the CTA was at that time, you have to expect that to be potential resistance or your first target. Question becomes can it overcome? Well, time will tell. So that's all the markets. Remember we talked a few minutes ago about the pullback and how I had cautioned everyone this morning that was trading the move long on the 1597 to anticipate resistance or your trade coming to an end at the 30-minute BBC. It's in the chat. If you're not participating in the chat, well, then you missed this kind of stuff. Okay? Price had pulled back here to 45.94. It pulled back again. And then it ran up to 46.04, which is where the BBC was. What was the high of this candle? $46.05. Price has passed through the step line. It's approaching red and falling. Because red and falling is directly below price, it could be potential support. If it fails to be good support, and 45.94 down to 45.91. But it's gotta get below red and falling. See how it touched it and bounced? It's bouncing more. That's how it works. On the Dow, price pulled up to the BBC. We got a bearish cross. Price pulled up to the BBC. Pullback holds more often than it doesn't. I said the first spot that the Russell would most likely find support was at the step line. Well, if you can see that wick, and if you can see the step line, that's what I was referring to. In Q, in the same position as the ES. Remember that pullback we were talking about where we had consolidated for 4 hours, 4 30-minute candles at the BBC? And we said, doesn't matter to us if price goes this way or this way. That's the beauty of futures. If price can break support, see how price came right down to red and falling and bounced? Okay. If price can break that support. Now, this is a limited window of opportunity. What do I mean by limited? I mean, it could go a heck of a lot further than that. I'm just giving you the simple and obvious, as Bert would say. Crude oil, pull back to the BBC, bouncing. No real surprise there. It's having trouble overcoming the step line. Then it has to address red and falling. Gold we just looked at. It's now the trade that was up $80 a few minutes ago. It's now up, if you took it, it's now up $170 per contract traded. But blue and climbing is right on top of price. So that's potential resistance. Here it's support. But when it gets directly above, it becomes potential resistance. You can take your profits, you can tighten your stops, you could stay in, you could do nothing. You could just sit and watch. It's your trading business. And no matter what kind of business you run, you have to make decisions. If you go out and buy a McDonald's franchise or a Subway franchise, they got rules and regulations for everything. But you're still going to have to make judgment calls, judgment decisions. Thanks, Odom. Appreciate your comment earlier today, too. Guys, I'm going to have to grab this real quick. Hang on one second. I'm back. I'm very sorry that I have to deliver this news. Dr. Tom went to be with his Heavenly Father. He was such a great friend to me. I will miss him so very much. Okay, guys, thanks for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.